Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at, as per the title of this video, whether we are about to enter into a new buying opportunity, not just with Bitcoin, but the whole crypto space. Also in today's video, I'm going to be having a look at Ethereum. And as per usual, we'll have a look at the wider markets as well as the 60-day Bitcoin cycle. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. So what is this new opportunity that we're looking at for the whole of the crypto space? It really comes from the Ethereum applications for a spot ETF. If we scroll down here, we'll see that there's a lot of applications by virtually the same companies who are running the Bitcoin spot ETFs, and we're due a decision on one of them today. And if the Bitcoin spot ETFs is anything to go by, the chances are, the probability is that all of them will probably get approved today. The first one on the block is this one here, Van Eck. That is going to be today, the 23rd of May. But as you can see, there's the Grayscale spot ETF that's pending. That's due on the 18th of June. Then we've got the BlackRock one here, as well as these ones here. So we've got quite a number of these Ethereum spot ETFs pending for approval. So today is either going to be Van Eck on its own, or all of them are going to get approved, just like what happened with the Bitcoin spot ETFs. So why is that important? Up to Monday, the probability of any of them getting approval this time around was placed at no more than about 10%. But since Monday, something's happened with the USA elections going on and the crypto space becoming a little bit of a political football. And there seems to be a change of direction within the government. And what we had on Monday was this. According to the Bloomberg ETF analyst Eric Balchunas and James Seyfarth, there has been chatter that the United States Security and Exchange Commission, SEC, is asking applicants to accelerate their 19B4 filings. And this is very similar to what happened prior to the Bitcoin ETF approvals. The analysts to actually increase their approval probability from 25% to 75%. So this is the big decision that's going to occur today. So brace yourself for a lot of volatility when the decision comes either way. So how has that affected the price of Ethereum? Well, we can see quite clearly on Monday, the price for Ethereum went from around about $3,050 all the way up here to $3,600. So that was a 20% increase in just one day on that news. And if we zoom out, what we're doing is, with this particular candle now, the weekly candle, we're breaking above the neckline at 3,500 from these support and resistance points. And we saw with the Bitcoin spot ETFs, the approvals triggered off the price for Bitcoin from around 40,000 to 73,000. And it's all about the credibility of the crypto space. And this is another addition to that. So while it's going to bring more money into the Ethereum spot ETFs, but just like with Bitcoin, the new money into the space, what it does is to raise all the boats within this space, as the saying goes. So we can expect Bitcoin also to be affected to the upside. Okay, moving on to Bitcoin and the liquidation heat map here that we've been looking at for quite a number of weeks now. And that is that with these prominent positions, the yellow lines, they're more all to the upside of where the current price is here. And as we can see, there are much less zones towards the bottom end here. So let's see what happens, but certainly the liquidation map is looking more for the Bitcoin price to be going to the upside rather than the downside. And these levels are at 70,500 and 71,200. So these are the two places you can expect the price to be going up over the next few days. And if we have a look at the Bitcoin ETF flow table with the amount of money flowing into the Bitcoin ETFs, we can see there's a shift taking place, which we really need to be aware of. And that is that grayscale here. Up to about 2 weeks ago, every single day since the 11th of January approvals for the Bitcoin ETFs, these figures were always in the red every single day. But over the last 2 weeks, these red figures are now dotted with some positive inflows. And as we can see from the 15th of May, there's only one red figure here. and that's this one. We can see an increasing amount of inflows rather than outflows from the Grayscale Trust. So the Bitcoin bleeding that was going on from the Grayscale Trust is now beginning to subside, and we can expect for more positive inflows going forward. And with the halving and the supply being much more less, the whole atmosphere for Bitcoin seems to be turning as it normally does after the halving. So these are the signs that we need to be aware of when the parabolic moves start. And these are the background details of what's going on for that move to take place. And this is reflected here in this table that we've been looking at now on a regular basis. And that is that the Bitcoin ETF overview with the assets inflows and outflows over the last 7-day period, we're now seeing Grayscale mostly now in the green rather than it has been in the red for the last 3-4 months. And the BlackRock ETF, we're now seeing much bigger amounts coming in one more time. We can see that the red figures here for the spot ETFs are much lower than the green figures here. So we can see that the whole shift is now moving towards a bullish atmosphere for the Bitcoin price. And if we have a look at the wider markets, it's showing exactly the same trend. Starting off with the SPX, we bottomed out here, as I mentioned on the Monday's video. We've broken through this neckline here, and we're going into the mid-cycle over the next couple of months. So we should see a clear run now towards the mid-cycle before we get some sort of a pullback and then a move to the higher side into the 60-day cycle low here in the middle of July. So it looks like a green light for the S&P to move further. Moving on to the dollar, as mentioned in the Monday's video, we may well get a bounce at this support line here, and we've just got that a little bit, as you can see. But if we move to the daily chart, we can see that just like here, this was a counter trend rally, this one here another counter trend rally, and we're now having this counter trend rally. So the chances are, the probability is, with the trajectory and the direction of travel being to the downside, we should see a further fall for the dollar over the coming days and weeks. And the gold on the monthly chart is making higher highs along the way on its travels to the upside. So the monthly charts are looking quite bullish, although we've got a long wick at the top here, which may slow the progress down a little bit. But certainly the direction is definitely to the upside. But what we have with gold on the weekly chart is some sort of a bearish sign that what we've got here is a bearish divergence on the RSI to the price here. We made a higher high on the price and a lower high on the RSI. So we could see a period of consolidation for a while for the gold before we start taking the upside position one more time. And similarly, on the weekly chart for silver, we made a higher high on the price here, but we seem to have made a slightly lower high on the RSI. So having broken through this neckline of the 30, as we've been mentioning over the last many weeks, we've come back and found support on it here. It may well be that we have a period of consolidation before using that as a base to move to the upside as a continuation pattern from here. And moving on to the 60-day cycle for Bitcoin, what we've got is we've broken away from this trend line here. The lower highs all along here, we moved out with this green Marubozu candle here, breaking the trend line, changing the trend from the downside to the upside. And as I mentioned in the previous video, what we had here was an inverse head and shoulders, which we've broken through that neckline now and making our way into the midpoint of the new cycle. So as mentioned in the last video on Monday, that this would be confirmed once we get above the first target, above this previous high, and the proper confirmation of this 60-day cycle low on day 42 would be at the 67,000. Once we break above that with a clear decisive candle, this would be our confirmation of the 60-day cycle low. And we duly got that with this green Marubozu candle one more time. So two green candles confirming our 60-day cycle low here. So we're now going into the midpoint of the 60-day cycle. So plenty of room now for it to go much higher before we get the expected mid-cycle pullback and then the right translated cycle into the new 60-day cycle end here. And that'll be around about the end of June. So what we have is a clear run, and if the Ethereum ETFs do get approved, that could encourage the Bitcoin price to break the previous all-time high here at 73,000. Before those approvals, the expectation was that we're going to come across some significant resistance here and then be range bound into this range from 73 all the way down to around about 60,000. So this was our expected position for the next cycle, to be just range bound here into this 60-day cycle though, before we take off for the parabolic element of the bull market. But what the Ethereum ETFs have done is given the probability to break up above the 73,000 that bit more energy. So we'll see what happens. Only time will tell, but certainly there is a bigger probability now, if the approvals do get the green light, for the price of Bitcoin to move above the previous all-time high. And really, this is not the time to be shaken out of this market, because when we zoom out on the bigger picture view on the monthly charts, as we've seen from the first cycle, the halving is the catalyst for the big moves to come. The parabolic, the last bit of the bull market, occurs after the halving here. And this would be the most craziest time to get out of the market. And a similar things happen here after the halving and here as well. And this is exactly where we are currently at the halving, and we're expecting this big move here. This would really be the last place to get out and be shaken out by the market, because the probability is you're going to have to buy back if you wanted to get back into the market at a higher price. And as I've mentioned many times in the past, the money is made by sitting, not trading. This is the time when people get restless and they can't handle the emotion of things going sideways or even down with a correction. So they start to trade and they start to meddle with their positions. And I just want to remind everybody, just to add value in this space, my little contribution, and that is to remind everybody that money is made by doing nothing, sitting, not trading. At the end of the day, what you do with your money is your business. I can't tell anybody what to do. All I can do is to share my thoughts and my views and my experience in this space. And as Warren Buffett succinctly puts it, these are the times exactly where we are, the starting point of a parabolic bull phase. These are the points where the stock market acts as a device for transferring money from those who are impatient to those who are patient. And what we really want, people on this channel anyway, I'm hoping that we will be the ones who are the patient ones. And as per the title of the video, we could well be in a new buying opportunity, and we really don't want to be the ones that miss out on this opportunity. And as this quotation says, nothing is more expensive than a missed opportunity. So this is the time not to squander that opportunity that we have lying in front of us. And finally, on those quotations, I still see many negative comments regarding the current bull run and why we have topped out, or why we're going down, or why when the interest rates are cut, the economy always goes down and not up, etc., etc. But please remember, at any one point, there are bearish forces and there are bullish forces. If you zoom out from your negative viewpoint, you will see that the bullish forces are far greater. The direction of travel is to the upside. What we have with the bull market is you have a bullet train, and you really don't want to be the person trying to stop that train on that track. It will certainly knock you over, and you will have a missed opportunity on your hands. So please reflect on your attitude, because it's your attitude and not your aptitude that will determine how far in life you go, i.e. your altitude. And as I showed you in last week's video, with this color coding of where we are in the cycle, the tops occur when we are in the blue zones. These yellow circles, these are the blue zones here. This is when we get the euphoric greed, and that lights up as the blue sign, but we are currently in the green. This is the one that just precedes it here. So when you zoom out, you get a much bigger, better picture and a more accurate reflection of what's really going on. Don't get sucked in by the short-term movements in terms of the markets, in terms of other YouTubers doing negative analysis, or even the negative news that might be out there. Always zoom out and have a look at the bigger picture. And we can see with that chart where we are in the psychology of the market cycle. And on this chart, you can see with these blue zones, that we are at the moment in the green zone, and that is the prelude to the blue zone here. So on this chart, the euphoria, the blue zone, is this one here. And this is what we're waiting for. And this is clearly where we're at the moment. We're in the belief stage. We are believing that this is a proper bull market, and this is the time to get fully invested here. And we want to capture the whole of this big move when it comes. And it'll be at the top of this move, after the thrill stage, when everybody's telling everybody else to buy. That'll be the time when we're about to top out. And that will be the most difficult aspect of this bull market, trying to get out at the top of the market, as close to it as we possibly can. And that's where our Bexit indicators come in. So you really don't want to be getting off here just when everybody's believing into getting on board. The last thing I would want to do is to get off the Bitcoin train. And many people, unfortunately, missed out the bottom of this bear market here and are only just getting on board, having seen this near 400% increase with the Bitcoin price. If you feel that you've missed out on that and want to be made aware of an opportunity to catch up a little bit at least, if not more, the Bitcoin miners may be the ones that provide that catch-up opportunity. And as you can see with Bitcoin, from the 15,000 bear market bottom here to its recent high of 73,000, Bitcoin went up by 372%. Whilst at the same time, the Bitcoin miners who are on a leverage play, and I usually give the example of Marathon Digital Holdings to represent the Bitcoin miners, but if you look at Cypher Mining, one of the other Bitcoin miners, when it bottomed out, just like Bitcoin did, around the end of 2022, Cypher Mining to its recent high has been up by 13x. That's a leverage play of 3.5 times the Bitcoin price. And the real opportunity with the Bitcoin miners, we're also expecting, just like Bitcoin, for this bull market to end. If it's a left translated cycle, it will end here around the end of 2024. But if we have a right translated cycle, then it may well elongate into this extended period here towards the end of 2025. So anywhere during 2025. And as you can see with this particular channel, if we get to the top of this channel at the end of 2024, from the current price in the Bitcoin miners, that would represent around about a 7x. And we're not expecting Bitcoin to 7x from where it is now at around 70,000, because that would give Bitcoin the price of around 500,000. And I don't think many people are expecting that. But should Bitcoin go to 500,000, then surely the Bitcoin miners are going to go much, much higher than the top of this channel here. So certainly the Bitcoin miners do represent a very good potential leverage play to the Bitcoin price. And as we've seen in the last cycle with Marathon Digital Holdings, from the halving, this white line here, the price bottomed out around this time, at the time of the halving, and went all the way up to $83. That was 125x, at the same time as Bitcoin went up by around about 8x. So you can see the bigger potential with the Bitcoin miners. And at the end of the day, everybody has to make up their own mind. And we cover the Bitcoin miners in the private member section here. And if you want to join us with 2 videos a week on a Wednesday and a Friday, as well as market updates every single day with an insight of exactly what's happening with the Bitcoin miners and Bitcoin and the wider news as well. If you want to join us with that opportunity with the Bitcoin miners, there's a join button here, as well as one in the description box here with this red button. And if you click on that, for about 40 pence per day or a coffee per week, you can join us with that opportunity. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.